Hey everyone, welcome back. Today we have a fantastic explainer lined up for you. We are popping the hood on the Happiest Minds Q4 FY26 shareholder report. Now, if you've been following the IT and digital transformation space, you know it's a wild, rapidly evolving landscape right now. But Happiest Minds, they just closed out a totally record-breaking fiscal year. We're going to bypass all the usual corporate jargon, look straight at their data, and figure out exactly what is powering that engine. Right out of the gate, I want to highlight a quote from their managing director, Venkat Ranarayanan. He said, FY26 was another year of growth and disciplined execution. And honestly, those two words, growth and disciplined execution, are exactly what we're going to see in the numbers today. You know, it's one thing to just grow your top-line revenue, but doing it with actual discipline, that's the real secret sauce that separates a fleeting success from a structurally rock-solid business. All right, here's our roadmap for today. First, the FY26 big picture. Second, breaking down the financials. Third, expanding the client base. Fourth, people and efficiency. And finally, looking ahead, AI first. Let's jump right in. Okay, part one, the FY26 big picture. We are talking top-line growth and shareholder returns. Just look at this year-over-year revenue jump. FY25 sat at roughly 2,06,000 lakhs. Fast forward to FY26, and that number surges to over 2,31,000 lakhs. That is a massive 12.3% year-over-year revenue spike. When you put those numbers into perspective, especially given the, let's say, complex macroeconomic climate for tech service providers lately, you can really appreciate the scale of their expansion here. So, what does this mean for the shareholders? Well, that top-line growth translates into direct rewards. The company reported a total dividend per share of 6 rupees and 40 paise for FY26. The board just recommended a final dividend of 3.65, which gets us to that solid 6.40 total. Basically, leadership is sending a loud and clear signal. They are absolutely committed to returning value directly to you as the company scales. Moving right along to Section 2, breaking down the financials. Let's check out their underlying profitability and balance sheet health. And this brings us to an absolute hero metric, adjusted profit after tax, or PAT, coming in at 279 crore. That is a really solid 9.4% year-over-year bump. Why should we care? Because it proves Happiest Minds isn't just buying empty growth or inflating revenue at the expense of their margins. They are efficiently converting all that top-line expansion into actual take-home profit. Now, looking at their international operations, you'll see a 9.2% year-over-year growth in constant currency. Just a quick reminder on what that means, it basically just strips out the crazy noise of exchange rate fluctuations. Currencies bounce around every single day, right? By removing that, we see their true, undeniable operational growth of 9.2%. Demand for their services is legitimately up. Okay, balance sheets can be incredibly dense, so we pulled out just the vital stats here to show their financial footing. Total assets grew from roughly 3.35 lakhs up to over 3.62 lakhs. Equity saw a really nice bump too, hitting nearly 169,000 lakhs. Sure, liabilities grew a bit, but the proportional growth in assets and equity, it paints a picture of a company expanding its base incredibly responsibly. The foundation is rock solid. All right, Section 3, expanding the client base. We're looking at global reach and industry diversification here. This is where the momentum gets real. They wrapped up FY26 with a massive 306 active clients. And get this, they added 51 brand new enterprise-level clients in just 12 months. 51! That is no small feat. It tells us their sales pipeline is super aggressive, and crucially, it's converting. But it's not just the sheer number of clients, it's the caliber and the variety that really stand out. Just look at some of these specific Q4 wins. You've got product engineering for U.S. insurance software, hospital modernization in Europe, an AWS IoT platform for European energy tech, digital asset platforms for waste and water utilities, even security apps for global warehouse automation. They are literally all over the map geographically and across totally different industries. They absolutely aren't vulnerable to a slump in just one single sector. Which brings us to Section 4, people and operational efficiency, the actual engine behind all this growth. So who is executing this massive vision? A 6,497-strong workforce. And a really brilliant detail here, they were just recognized as a top employer in India for 2026. Look, in the hyper-competitive tech world, retaining your top talent is basically half the battle. Awards like this, mixed with a growing headcount, prove they've got the healthy culture required to actually sustain their ambitious targets. But hey, it's not just about having a ton of people, it's about how effectively they're deployed. Their utilization rate improved to 81.4%. Let's break down the so what of that stat. Tighter utilization means fewer folks sitting on the bench. They're actively out there billing hours on client projects. That operational hyper-efficiency is exactly what fueled a nearly 80% year-over-year jump in their Q4 profit after tax. Literally, efficiency equals profit. Okay, final stretch. Section 5, looking ahead, AI first. Let's dig into their strategy and pipeline for FY27. Take a look at the tagline explicitly anchored right under their logo, AI first, agile always. Guys, this isn't just a fluffy marketing slogan. It is a fundamental structural pivot. They are actively positioning themselves to not just participate in the AI boom, but to be the primary facilitators of AI transformation for all those global clients we just talked about. And the proof is absolutely in the pipeline. In Q4 alone, their AI pipeline grew by a staggering 27%. Just think about that for a second. 27% growth for a new pipeline in a single quarter. When enterprise clients look to modernize right now, AI is literally the very first question they ask. Happiest Minds is capturing that exact demand, building a backlog of AI projects that's going to drive revenue well into the future. So you take their historic Q4 performance, you add in that incredibly efficient workforce, and you mix it with this undeniable surge in their AI pipeline. The result? Management projecting a very confident 12.5% growth for FY27. Putting a double-digit growth target on the board in a cautious tech market shows some extreme confidence in their AI-first game plan. Which leaves us with a fascinating question to chew on. We've seen the 12.3% growth in FY26, the 306 active clients, the expanding margins. But the real wild card is the future. How is this explicit AI-first strategy going to accelerate Happiest Minds' market position against their competitors in FY27? Will that massive 27% pipeline growth translate into even fatter margins? It's a brilliant pivot, and you can bet we'll be watching their next quarterly results to see how it plays out. Thanks so much for joining me for this explainer, and keep learning.